Rajan Sethuraman, who's the Chief Executive Officer at Latent View Analytics, joins us now to talk about that. Rajan, thanks a lot for joining us. Can you tell us about how the overall demand situation is? Because one of your clients in the retail vertical had cancelled their analytics initiatives with you. I think this happened in Q4 or middle of Q1. Are you seeing a lot more cancellation across clients? Is that something that, perhaps your shareholders should be concerned about?
Not really. I think on the retail front, there is a little bit of slowness that we see in terms of new projects getting underway, but the conversations are ongoing even at this point in time. So I don't see any cancellations or stop in work happening at this point in time. I think new work might take a little longer depending on what companies see within their own context. And therefore, some initiatives might take a little bit more time. But even as we speak, we have at least a couple of conversations in the retail space itself, with completely new prospects, which seem to be progressing well.
Say that it's the new projects, getting new orders are a bit on the slower side. Earlier, you had told us that some of the deals you got have been pushed forward to Q1 and Q2. Perhaps that explains the sequential downtick in revenues. And overall, are you trying to tell us that decision-making is slowing down? And will that reflect in your earnings trajectory as well?
So my commentary was more on the retail sector. The pipeline and the conversation in the other sectors seem to be very strong. There are four things that is indicating fairly robust growth momentum even at this point in time. So one is that very recently we've been able to close a couple of deals in the $1 million mark. And we are in the verge of closing 2-3 more in the $2 million range. So the size of the deals are getting larger. So my earlier commentary was that larger deals take a little bit more time, but those closures are happening and we are starting to see that progress. Second is I see very strong momentum for data engineering work. I had mentioned that in the past. Most organizations are starting to really look at how can they get their data platform set up in a robust fashion, and there is enough momentum on that front. And thirdly, we also see that organizations in this current context are starting to look at their analytics capability and the maturity of the analytics capability. So our consulting practice, which is really focused on helping think through the analytics strategy and the roadmap of initiatives, that is seeing enough traction as well. So we are having at least 3-4 conversations which look very positive in terms of helping them on the strategy and the roadmap of initiatives. So these things augur well in terms of how the growth momentum is in this current quarter. We expect that there will be some positive momentum into the next quarter as well, right, based on the current state of conversations.
So this number, this TCV value, right, new deal wins, what does that stand at, and what is the comparison? You said you've closed a few deals.
Correct, yeah. So the earlier in the past, deal sizes were in the $500,000, $400K kind of a range. We have seen that deal sizes are increasing to closer to the 1 million mark. And there are at least 3 deals which are closer to the 2 million mark. So that is a good sign. And I'm talking about numbers which we realized within a period of 12 months. I mean, not necessarily in this fiscal year, but a lot of that, depending on when we close them, will start coming into this fiscal year itself. So overall, the size of the order book is increasing because of the conversations that we are having at this point in time. Of course, some of them are in the probability ranges, depending on where they are in the pipeline. But we see good momentum in terms of larger deals coming through in the pipeline.
No, so you've not signed them on. These are not orders which have been booked.
Yeah, there are 2 or 3 that have been booked. There are 2 or 3 which are on the verge of booking. But the good news is also that the inflow into the deal pipeline itself is of a nature where the conversations are larger, and we're not talking about the earlier size of the deal. So that's what I meant by the positive.
We've got someone actually right now, Rajesh. We were talking to him. He of course manages money. He was saying he met an IT company who told him that growth is not a problem. Finding the right people to execute projects is still the problem. Would you agree with that?
So overall, I think the environment, that is still a challenge, because when we go and look for hiring in the lateral market, right, people with experience, we do see that the renege rates are continuing to be quite high. How we have addressed that is to actually have a fairly strong campus hiring program. So we made over 230 offers And most of those people have joined us except for the last batch of 30 people that are remaining. So at this point in time, we have a fairly healthy bench of 15% plus, which we expect that will get deployed over the remainder of this month and early into the next month. But the new people who are coming on board will also be adding to the bench strength that we have. So we are comfortable in some sense, right, in terms of how it is progressing. But of course, we have to make sure that compensation and everything is competitive, right, with respect to the lateral market. Our dependence on lateral is what we are trying to pivot away from, so that we are able to rely more on entry level now that we have also crossed a certain threshold in terms of the number of people that we have in the organization.
Okay, would you like to raise your margin guidance? I'm asking because, your margins have consistently been above your guided range. In the last 2 quarters as well, you've done about 29 to 30%. Do you think you can better that?
So our plan is to keep it in that range. I mean, the 26 to 28% range is what I have indicated in the past. And we would want to continue operating there because any additional margins that we are able to generate, we would want to take it and flow it back into the growth initiatives. I have mentioned that sectors like banking, financial services, and retail, and then also Europe as a geography are very, very strong focus areas. We have already started investing both in the front end as well as on the capability, with respect to Europe as well as those sectors. So the intent is to continue with that investment plan so that we are able to accelerate growth rather than show any higher than guidance margin at this point in time.